feel-good rally on Monday. Because remember, after the attempted assassination, Monday morning before the market opened, the news came out, 65%, that's right, 65% chance Donald Trump will become president. Dow futures shot up 250 points, celebrating, all excited. But this excitement started last week when they said we're going to have at least 3 rate cuts by September. So if you take 3 rate cuts, last week that announced Trump, it's up to 65% that he's going to win. I mean, everybody was so excited. Now going back to last week, the CPI came out and said it's down. It dropped quite a bit. Problem, the PPI didn't drop. The PPI said inflation's still going up. But forget about that one. Let's deal with the one that's got all good news. Let's forget the bad news. And traders started to sell tech stock, started to go into material stock, industrial stock, recreational, airline stocks, casinos, hotels. Everybody was celebrating. Wow, we're going to get 3 rate cuts. And we're going to go back to the economy stocks. Well, we don't know that yet. Early. First of all, remember, they kept interest rates too high for too long. And when you keep interest rates too high for too long, there's a lot of problems. Now, let's take a look at the S&P. Now, since 2023, the market's been going up, the S&P, and our subscribers here to Phil's Gang has been participating in this rally. In fact, if you go back to October 2022, the market's been going up since then. Both same reason. Rate cuts, rate cuts, rate cuts. Promise of rate cuts, even though we didn't get rate cuts. Now they're saying, oh, it's for sure now because of the CPI. Well, it's not. Again, we're still long. You never fight the trend. You never fight the money. Trend is everything. I always tell Phil's Gang members every morning, when the market opens, you lose your opinion so you don't lose your money. The market always does what it's supposed to do, but never when it's supposed to do it. But you got to lose that opinion, and you got to follow the money. And the trend, take a look again. Look at the trend. The trend's been straight, and we've been enjoying that trend. Impact being rates too high for too long are going to have a devastating effect. What they're not talking about, they don't want to talk about, is the massive deficit. They keep spending far more money than they collect in taxes. Deficits are terrible. The deficits since Obama to today are up 340%. Deficits are killer. Deficits are caused by Biden, the latest deficits. He's been spending $1 trillion every 100 days. $1 trillion. He doesn't have enough money to cover it. In fact, what's happening is those deficits by Biden is up almost 130% more than the revenue he collects. So think about that. He's spending so much money that by about 130% more than he takes in tax revenue, creating these terrible deficits. And deficits are killer. Now, feeling is not the inflation dropping, which they're selling us. That's not what we're feeling. We're feeling deflation. So in other words, what they're saying is, look at this, prices are coming down. So that's good. So inflation, we're winning the battle in inflation because prices are coming down. But wait a minute. You got to first identify why are prices coming down. Now, if prices are coming down because you're taking all this money and putting it into business investment, you buy new machinery and equipment, and factories are expanding and we're producing more. And as we produce more, we're selling more, and wages are going up, and savings are going up, and 401ks are going up, and there's real prosperity. Sure, I get it. But that's when you have that kind of prosperity, you have demand. People go out and start buying. But what happens is when you start buying and productivity can't keep up with the prosperity, so let's say a bicycle shop always has 100 bicycles in inventory, but now he's only got 25 because the producers of the bike can't keep up because there's so much, salaries and savings, everything's doing so well. So happens is they start pushing prices on the remaining bike, and that's inflation. The idea is you got to have, and we don't have one of these guys, you got to have a Fed chairman who knows how to move inflation down as it's needed to keep it on a nice level. But what's happened is our prices are going down because things are going, our wages are going up and savings are going up and our credit's going up. Just the opposite. Things have gotten so bad, people don't have the money to spend. So what's happening? Nobody's buying stuff. Stores are starting to cut prices. So we're getting deflation, but they're not going to tell you do that. Oh my God, look at this. Inflation's going down, prices are dropping, but they're not going to be honest and tell, well, wait a minute. The only reason why prices are dropping, people can't afford the stuff, so stores are cutting their prices, and the wholesalers and the manufacturers, they're cutting their prices. But no, they're not saying that. They want you to believe that prices are coming down. They're finally beating inflation because things are so good. But wait a minute. Prices are deflating. Now, why are prices deflating? Well, that occurs when money and credit decline. Demand for goods and services decline. Why? Because hours worked are declining. Unemployment, we just got the numbers, increasing. Debt repayment. People are struggling. They can't pay their debt. Bankruptcies, personal bankruptcy are up 17% this quarter. Small businesses are struggling. They're laying their help off and they're cutting back their hours. Then they finally lay them off. So yes, they're cutting their prices, but they want us to believe prices are coming down because things are good. Prices are coming down because things aren't good. So it was no surprise that inflation was coming down. They're making it sound like, boy, this is a big surprise. Let's celebrate. What are they, nuts? Inflation comes down anytime you have the 2-year Treasury higher than a 10-year. But they're not going to point that out to you. And right now, we've had the 2-year Treasury higher than a 10-year for almost its historic length of time. That tells you, that identifies that there's inflation. So that's what's going on. So when you hear how inflation is going down and we're going to get rate cuts, no, we're not. We're not going to get rate cuts. But for now, gold has been doing terrific. Take a look at our gold stock. We've been doing terrific in gold. We started buying our gold stock some time ago because exactly what's going on. We bought the miners. I told them the miners were going to do very well. Look at this. Look at our miners doing beautifully. All our gold stocks, all our miner stocks are doing terrific. And the miners are going to continue to go higher, okay? Believe me. Because, again, that's how you fight inflation. You buy gold. So the idea that the inflation came down last week in the CPI and they discounted the PPI, they didn't want to talk about that. See, they should be focusing in on the PPI, but they're not. So that's what's going on right now. So you're being misled. And again, what you want to do for now, and here's what I got my gang member doing, I've made sure that while they're telling this tale of how they're going to be cutting rates and everything are wonderful, we moved our members into emerging markets, EEM. Why? Because as long as they keep the story out, rates are coming down. I'm not going to fight the trend. You never fight the tape. So I got my members into EEM. We got our members into IWM. We got our members into banks, small banks carry. Look how they're taking off. Here's the important spiders. Look at this. We've been doing terrific with the spiders. But here's what you're going to have to watch. NVIDIA. NVIDIA will tell you what's going on, the truth. If NVIDIA can't make a new high, right up here, that's new high, okay, of that June 20th. Remember? They bought, crazies went in and bought 655 million shares on that day. But look what it had. The next day, it had a key reversal. See it right here, that candlestick? Anytime you get a candlestick this, the next day, that's called a key reversal. So it's not been able to get back up to this high since they've had the key reversal. If this stock, NVIDIA, drops and takes out this low right here of July 3rd and takes out this low of June 24th, then it's over. What's going to happen? All the tech stocks will start collapsing and everything will collapse. That's what you got to keep your eye on. So again, when you heard how we're going to have all these 3 rate cuts going into September, I don't think you're going to see it. And again, when everybody's telling you how great things are because we beat inflation, we're going to go, you know what? He's right. Inflation may go down to 2%, could even go down to 1%. Why? Because deficits are killing us. That's not good news. That's bad news because, yes, he could blow right through 2% by spending more money. Our president, our Congress keeps spending more money. We take in tax road, our deficits keep going up, and that could blow us right down because people don't have any money to buy. This is what happened right before the 2008 crash. People have to start to decide, do I use my money to buy, put a payment on my house, or do I buy gasoline? That can happen. But in the meantime, why don't you join my gang? We've been helping people like you, the non-professional, for over 25 years. It's free for 10 days. And again, all you have to do is go to the link in my bio or go to philsgang.com, and we'd be happy to help you. We love working with a non-professional. We really do. So be careful. That's all I'm saying. Careful. Never fight the tape. As long as the trend's going up and the money's going up, stay long. Watch NVIDIA. NVIDIA is the key. That's about it. So I'll see you on the chart.